Hey everybody, my name is Good evening, the 7th of December 2018. I promised earlier today I'd just circle back tonight and comment on today's action, so I'll do that once again with the video. So this is today's bar. You might recall in day before yesterday's video, I said I would go into the day if I were a short-term trader yesterday, short, but I'd be ready to reverse that position because I thought that this market really wants to move higher. And sure enough, at the beginning of the day, we had a sell-off. It caught momentum. The Dow was down 780 points at one point, and it ended up closing almost in the positive on the day. So it doesn't always happen this way, by the way, but what I suggested is exactly what played out. Now today, I expected actually a pretty good day. So if I were a short-term trader today, I would have gone in really long, aggressively so, and expected to do well today. A lot of momentum yesterday. That big surge was on really high volume. It looked like sellers pretty much here just gave up the ghost, forced the market way down, and that's generally where buyers, smart money comes rushing back in. And typically, when you have this kind of action, you get some follow through. We got some follow through. However, that ended up waning. And as you can see here, the market closed pretty close to the low. Folks, I'm just here to tell you that this is, quite frankly, the kind of volatility we will get in even the best of bull markets. I remember 2013, virtually all of our portfolios that had equity exposure had a phenomenal year. 2014 was really rough. It looked a lot like 2018, and you recall we had a good 2017. And we were negative by October, but from October on, we had a really good fourth quarter, which is not at all unusual. Actually kind of expected that to happen this year, but as I've been talking about and illustrating here on the blog, we have some unusual headwinds this year in the form of these trade disputes that is really making it tough for the market. I've said in here multiple times that I just don't see how we get to new all-time highs unless we can get some legitimate remedy to this trade issue with China in particular. But again, even without that trade issue, I could take you back ad nauseum into decades and decades of charts, and this kind of action makes really good sense. And which is why, I mean, it's based on my experience that I said, you know, it wouldn't surprise me, I said it in here, if we didn't come down, test this level, could easily breach this level and be talking about different support levels. Said it again here. I will say today surprised me. I know why it did what it did. I didn't expect it, but still, that's not what I would have thought the setup was going into this morning. Okay, so looking at this morning, this is just the 1 minute daily chart. So this is the action today. And so I felt pretty smart as the market just kind of maintained its momentum. We're up like 140 points in the Dow. Of course, this is the S&P. This began to happen. If I was looking at this chart, I'd say that's perfectly normal. I'd come back, I'd expect to test yesterday's high, which is right here. That would have been very, very normal. Short-term traders taking their profits, but then taking this opportunity to buy it again. But as you can see, something happened in terms of sentiment. And so then quite a dramatic sell-off began. We got down in here, buyers came in, but they really couldn't hold much. Anybody who didn't sell right here took the opportunity to do it there, and again there, and then we'd sold off the market a bunch. Found some support here, which has been old support, 2650. Looked pretty strong for a little bit, but then took this opportunity here. Anybody who didn't sell here took this opportunity to do it. Anybody who didn't buy here, bought. But ultimately, this was given up. 2640, another old level of support, got found. Traders came in, pushed it all the way almost back up to this resistance. If you didn't sell here, you took this opportunity to do it, and so on and so forth. You know, did a little battle here, lost, took an opportunity. Those who didn't sell here got scared, sold there, came down, found support right here, 2630. Funny how these round numbers, my line isn't quite on it, but that's where we are. Some pretty good buying, sold off, tried that again, lost it. So 2630 became pretty much the day's support line and actually held that at the end of the day after coming down below it here. So 2630 held pretty strong, but folks, what happened was that sentiment changed dramatically, and it wasn't what I thought what was going to happen for about the third time. I've told you that this evening. Right in here, economic advisor Larry Kudlow said that talks are going well, and if they take longer than 90 days, absolutely the president is willing to extend that. Makes great sense. I don't know that it had anything to do with this. I expected this anyway, but it certainly didn't hurt. What did hurt was right in here as we were coming down, probably going to test this, Peter Navarro, one of the president's trade advisors, completely contradicted what Kudlow said right here and said, no, absolutely not. We get to 90 days, if we don't have a deal, we're going to raise tariffs like there's no tomorrow. This market is not going to withstand that kind of scenario if indeed that becomes reality. So this is traders just doing what they should be doing, expecting that there's going to be a lot of fear and panic on that news. Sure enough, we got it. And nothing really happened throughout the day to make that any better. So why was I bullish going into today? Well, I talked about momentum and so forth. Another reason is simply because I know hedge funds are having a devil of a time this year. And a lot of other funds and a lot of managed money just hasn't been a good year for the market. And there's some big declines for some portfolios. So they are desperate to see something happen or make something happen between now and the end of the year. When you look at sentiment, when you look at cash in portfolios, and you look at seasonality, odds really favor a strong rally between now and the end of the year. The problem is we've got this phenomenal headline risk that if it gets better soon, I think we will see a nice surge to end the year, and maybe it'll make for a halfway okay year when it's all said and done. But if that doesn't happen, then we just kind of meander and we have this volatility and kind of a nauseating look to the market between now and the end of the year, which is almost upon us. We get into next year, and you actually have probably pretty good earnings growth. You have really cheap valuations right now. Financials are screaming, buy me, if the economy isn't about to roll over. Foreign stocks look really cheap. Virtually sector by sector, things look very, very attractive right now in an ongoing bull market and an ongoing economic expansion. If we can get this trade stuff out of our way, I think we do really, really well for a period going forward. I don't think this bull market should end anytime soon when I look at macro conditions. I acknowledge that it could happen. If it does, it'll be earlier than its time, I think, and it'll be a very man-made scenario. It won't be a cyclical scenario. We're not there yet. Things still look okay. Political incentive is huge for both the US and the Chinese authorities to get something that makes sense. We should think that's going to happen. I know there are other things that are looming out there that cause concerns as well. As long-term, thoughtful, methodical investors, we absolutely cannot let this volatility get under our skin. We're going to make big mistakes at the wrong time if we do that. I have no problem getting defensive at lower levels when conditions tell me to get defensive. It's not about the level we do it at. It's about the conditions under which we do them. Right now, as I keep repeating day after day, conditions are still okay. This week's data suggests they're better than okay. So under those scenarios, you got to stay the course. You have to be patient, and we have to let things evolve. And I will keep you abreast of the day-to-day because I know you listen to the news. I know people do get nervous about it. So I think it's important that I come in and offer my perspective on what's going on and help all of you, of course, our clients in particular, keep your heads about you. Thank you as always for watching and listening, and I'll talk to you again very soon. Take care.